When you're just starting out on your investment journey, one of the biggest questions is, should I invest in stocks or real estate? It's a tough choice. Both are powerful tools for building long-term wealth, but they offer very different experiences. One is fast-moving and digital, while the other is more hands-on and physical. So in this video, we'll dive into the pros, cons, risks, and opportunities of stocks versus real estate, to help you decide which one is the better starting point for you as a beginner. Why stocks are a great starting point. Let's begin with stocks, which are often considered the easiest entry point into the world of investing. One of the biggest advantages is accessibility. With apps like Robinhood, Fidelity, or E-Trade, you can start investing with just a few dollars. You don't need tens of thousands in the bank, and you don't need a lot of specialized knowledge to get started. Thanks to index funds and ETFs, you can invest in entire markets without picking individual stocks. Another major benefit is liquidity. Stocks can be bought or sold almost instantly during trading hours. If you need to pull your money out, it's usually as easy as clicking a button. That's a big advantage compared to real estate, where selling a property could take months. Plus, stock investing is mostly passive. You don't have to deal with tenants, fix broken pipes, or worry about property taxes. You can set up automatic investments every month and let compound growth do the heavy lifting over time. And if you invest in dividend-paying stocks, you can even generate some passive income along the way. However, it's not all smooth sailing. The stock market is known for its volatility. Prices can rise and fall dramatically based on headlines, interest rate changes, or even tweets. For beginners, it can be emotionally challenging to see your investments drop 10% in a week. The key is to stay calm and focus on the long term. But that's easier said than done when your hard-earned money is on the line. Why real estate is a wealth-building machine. Now let's shift gears and talk about real estate. For generations, real estate has been one of the most trusted ways to build wealth. The reason? Leverage. You can buy a property with a relatively small down payment, say 10% or 20%, and control a much larger asset. If that property increases in value, your return on investment is magnified. It's like using someone else's money, usually a bank's, to grow your wealth. But that's not all. Real estate offers something stocks usually don't: consistent monthly cash flow. When you own a rental property, you collect rent every month. After paying expenses, that's money in your pocket. Over time, that cash flow can grow, especially if you raise rent, pay down your mortgage, or increase the property's value through renovations. Then there are the tax benefits. Real estate investors can deduct expenses like mortgage interest, property taxes, repairs, and even depreciation, which can significantly lower your taxable income. Some investors pay little to no tax thanks to these advantages, but owning property comes with real responsibility. You may have to deal with late rent payments, maintenance emergencies, or even evictions. If you're not careful, real estate can become a full-time job. And unlike stocks, real estate is illiquid. You can't sell it quickly if you need fast cash. Plus, the upfront costs, like down payments, closing fees, and renovations, can be a major barrier for beginners. Comparing them side by side. So let's break it down. Stocks are ideal for investors who want to start small, keep things passive, and enjoy flexibility. They're perfect if you're looking for low-cost, diversified exposure to the market. They're also great for building discipline and learning how to invest without a lot of risk. Real estate, on the other hand, is more hands-on and capital-intensive, but it can offer powerful returns through leverage and cash flow. It's better suited for people who are willing to learn about managing properties, dealing with tenants, and taking on a bit more risk for potentially greater rewards. Here's a simple way to think about it. If you want something fast, flexible, and digital, go with stocks. If you're ready to get your hands dirty and build long-term cash flow, consider real estate. And remember, these are not mutually exclusive. Many successful investors start with stocks, build up some capital, and later use that money to buy their first property. Others begin with real estate and use the income to invest in the stock market. The two can complement each other beautifully. Conclusion: which is better for beginners? At the end of the day, there is no one-size-fits-all answer. The better investment for you depends on your goals, risk tolerance, available capital, and lifestyle. If you don't have a lot of money and want to learn investing in a low-risk way, stocks are probably your best bet. But if you have some cash saved up and want to create consistent monthly income while building equity, real estate might be the smarter move. Whatever path you choose, the most important thing is to start. Don't wait for the perfect time or the perfect opportunity. Start small, keep learning, and let your knowledge and your money grow over time. If you found this video helpful, make sure to hit the like button. Drop a comment below telling us which one you prefer, stocks or real estate. And don't forget to subscribe for more videos on wealth, investing, and financial freedom. Thanks for watching, and I'll see you in the next one.